Negative interest rates are a very bad thing, and they are applied against America's working poor. Most people think that negative interest rates are a good thing because it's the opposite of interest rates that we see every day, but that could not be further from the truth. You might be thinking, well, if banks charge interest for lending money, then do they actually pay you money just so you could borrow from them? No. All negative interest rates mean is that when you deposit your money in the banks are charging you just to hold your money there. These types of rates are implemented when a country's economy is facing deflation. Deflation also sounds really nice because that means overall consumer prices drop, but what they don't tell you is that as the value of your dollar goes up, you start losing your job, your wages go down, and any money that you owe becomes much more expensive to pay off. It also means that there's a huge contraction happening in the money supply and that the economy is on the verge of or is absolutely collapsing. Central banks fight deflation by loosening up the money supply and making capital more accessible, usually lowering interest rates. That frees up the money supply and generally consumership goes up. But there have been times when world central banks have lowered the interest rate to zero and deflation was still a threat. So they had to go negative. And that works, especially for people who have a lot of money. Because let's say I'm a multimillionaire and I put $1 million in the bank and I lose, let's say, 1% of that every year just by letting it sit. I have more of an incentive to take that money out and spend it or invest it. That can actually prop up the economy. About 10 years ago or more, Japan and the Eurozone have implemented negative interest rates. That's no longer the case, but it happened, it worked. America has never officially launched negative interest rates across the board. While the American system has never done this to the wealthy people, it's happening to the working poor in the name of monthly maintenance fees. There are some banks that require you to have at least $1,000 or $1,500 or a certain amount of money in a savings or a checking account, or you have to pay $5, $10, maybe even more than that every month. You are losing money by keeping it there. If you only have $100 in a checking account reliably every month for the whole year and a bank's fees per month are $10, that means the bank is making 10% off of your deposits. And let's say you only have $5 in your checking account and then $10 gets taken out from the monthly maintenance fee. Great, you've overdrawn and now the bank can charge you $20, $30, who knows how much more. In my opinion, there are two solutions for this that we should absolutely pursue. The first one is obvious. We have to campaign our local politicians and of course our congressmen to eliminate these monthly maintenance fees, or at least make them even across the board. Let the wealthier people pay these types of fees. The second is that we just start looking for banks that don't charge monthly maintenance fees. And there are a lot of them, especially ones that are online. And the only reason that we're even using these big banks that charge the monthly maintenance fees is because they're ubiquitous. It's very convenient, but it's costly. So if you are right now unofficially paying negative interest rates, it's one quick, simple Google search to find the banks that won't do this to you. My name is the Geo Husar, and just remember, the banks that are charging you those monthly maintenance fees are still making loans based off of your deposits. Thanks for watching.